Gold is now shown itself to be the inflation hedge. It's no longer going sideways, even though it never really was. I mean, it's way outperforming. The U.S. stock market is down 70% priced in gold in the last 25 years. And in fact, when you hear the financial news keep talking about Dow making a record high, Dow making a record high, no, it's not. It keeps going down. Year to date, the Dow is down, I don't know what, over 20, 25% this year. The Dow is getting killed in terms of real money, eviscerated. But you don't know that if you price it in funny money. And that's one of the reasons why Donald Trump wants inflation, so he can make it look like the stock market is going up, even though it's actually going down. See, everybody can feel richer because of inflation, even though they're getting poorer. Now, of course, if you don't have financial assets, you don't feel richer. You just are getting poorer, and you know it. And that's why a lot of people voted for Trump.
Gold's role as the ultimate inflation hedge is now undeniable. Despite official claims that inflation is under control, the market is delivering a very different message. The Dow, when priced in gold, has lost nearly 70% of its value over the past 25 years, exposing the illusion of strength in nominal stock market records. Inflation is not only eroding purchasing power, it's masking real declines in wealth. This explains why major institutions are shifting course, acknowledging what independent analysts have argued for years. Bonds are no longer safe, stocks are faltering in real terms, and gold is becoming the anchor asset. PeterSchiff, a veteran money manager and longtime advocate of sound money, emphasizes that the tide has finally turned. For decades, he stood almost alone in recommending gold while Wall Street ignored it. Now, even firms like Morgan Stanley are rebalancing their portfolios to include significant gold allocations, signaling a broader awakening. Mining stocks, too, are posting record gains, combining both value and momentum in a way that traditional equities cannot match. Now, we present the clips from PeterSchiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Gold was at a record, and now it keeps setting new records. But this would not be happening if inflation were well contained. Right? If we really were headed back to 2% in 2 years, like the Fed claims, if inflation hadn't been beaten into submission the way Donald Trump claims. Every time he gives a speech now, whether it's at the UN or whether it's at Charlie Kirk's funeral, he talks about how inflation is dead and buried, right? How we've got the hottest economy in the world, it's the greatest economy in the world, and we've got no inflation. Well, if we really had no inflation, gold would not be doing this. Silver would not be doing this. So these are real world market indicators that there's a problem here, right? And that is inflation. These are inflation hedges. These precious metals are very sensitive to inflation expectations. People expect more inflation, they buy more gold and silver. So that's people voting with their feet, right? They're walking away from dollars and they're putting their money where my mouth is, and they're buying gold and silver. So this shows you that what Trump is trying to sell you and what the Federal Reserve is trying to con you into believing are not true. Morgan Stanley came out and tweaked the 60-40 portfolio. Now, this is a Wall Street bellwether portfolio. 60% stocks, 40% bonds, right? I mean, that's it. That's the portfolio. They tweak it a little bit. If you're really young, they might say, look, go 80% stocks and go 20% bonds. And if you're older, maybe go 60% bonds, 40% stocks, right? They tweak it depending on where you are, towards your retirement goals. But that's been the portfolio ever since I've been in this business. I got my license in 1987, coincidentally, the year the stock market crashed. That's when I became a stockbroker, the year the stock market crashed. So I didn't really enter the industry at the best time. Although in hindsight, it was a great time to buy, but it was, a difficult time because a lot of stockbrokers, were waiting tables, right? They lost their jobs because of the 87 stock market crash. But that's when I got into the business. But ever since then, it's been 60-40, right? Morgan Stanley said, you know what? We need to split that 40% that was in bonds, 50-50 with gold. So Morgan Stanley came out and said our portfolio is 60-20-20. 60% stocks, 20% bonds, and 20% gold. Unbelievable. Now, it's about time. And the reason that Morgan Stanley is doing this is they're saying that we need an inflation hedge. And since stocks can also be viewed as an inflation hedge, although not all stocks are the same in that respect, but bonds are clearly the biggest victims of inflation, right? If you own bonds, inflation kills you. There is no hedge. And so Morgan Stanley said, look, we're going to have high inflation. Forget about 2%. That's old news. That's never happening again. And we're going to have high inflation. That's obvious. And so our clients need to hedge their bonds. So they need to buy gold. This is big. Not only is this a sell signal for bonds, because if you're a Morgan Stanley client and you got 40% of your portfolio in bonds and your advisor says, well, you got to go down to 20%, how do you do that? You got to sell half your bonds, right? It's a sell signal on bonds. A lot of those bonds are treasuries. So you have brokerage firms telling their clients to sell treasuries when the U.S. government has a record amount of treasuries that it needs to sell, right? Houston, we got a big problem here. But all the money coming out of bonds is going into gold. Now, again, the first time in my career as a stockbroker, major firms are recommending gold. Now, of course, I've been recommending gold the whole time. When gold was under $300 and I got my stockbroker license, I would tell people to buy gold, right? I was, the odd man out. Now, I'm still kind of the odd man, but I've got some company because it's just starting, right? This trend is going to envelop all of Wall Street, right? It's like a herd, right? People are afraid to go out on a limb, right? Nobody wants to be the first one to buy gold because then if it goes down, you look like a fool. Hey, why'd you buy that? Why'd you put my money in that rock? Why'd you buy these gold stocks, right? You're fired, right? People are afraid, right? But once somebody else does it and it works, and then somebody else does it and it works, now you got to do it. Because now if gold goes up, and it will go up, and the mining stocks go up and you don't own them, now your clients are going to say, hey, why didn't you have me in any gold? Why didn't you have me in any gold stocks? You're fired, right? So now the pressure is to put them in. So that's why I think we're going to see a massive run up between now and the end of the year, and probably between now and the end of the decade, as more people jump into the water, right? Because other people are there and they're swimming and they're having a great time, and you don't even have to, put your toe in. You could just jump right in now because everything is great. So this is what's going to happen, right? People need inflation hedges. Gold is now shown itself to be the inflation hedge. It's no longer going sideways, even though it never really was. I mean, it's way outperforming. The U.S. stock market is down 70% priced in gold in the last 25 years. And in fact, when you hear the financial news keep talking about Dow making a record high, no, it's not. It keeps going down. Year to date, the Dow is down, I don't know what, over 20, 25% this year. The Dow is getting killed in terms of real money, eviscerated. But you don't know that if you price it in funny money. And that's one of the reasons why Donald Trump wants inflation, so he can make it look like the stock market is going up, even though it's actually going down. See, everybody can feel richer because of inflation, even though they're getting poorer. Now, of course, if you don't have financial assets, you don't feel richer. You just are getting poorer, and you know it. And that's why a lot of people voted for Trump, because they were getting poorer. The problem is they're going to get even poorer now that they voted for Trump, right? Because all the problems they thought Trump was going to solve, he's going to make worse. And I'm going to get to that in a little bit. I want to continue talking about gold. But so you've got now Wall Street for the first time recommending gold stocks. So there's not going to be any big pullbacks. You just got to buy gold and silver because now we've got a lot of company. It's not just PeterSchiff's fans and a few other gold bugs that want to buy gold and silver, right? We got a lot of other people that want to buy, and there's not that much of it. The same thing with mining stocks. The GDX hit a new record high this week, not today, but earlier in the week, but it's up 120% on the year, 18% so far this month. 1 month. 1 month, the GDX is up more than the S&P was up all year. The GDXJ up 20% during the month of September. Again, we got 2 more days to be up. It's up 125% on the year. Now, Wall Street is not going to allow this to go unnoticed, especially, as it's getting close to the end of the year. These are the best performing stocks, and they're still cheap. These tech stocks that people are buying are expensive, and they're losing a ton of money, right? Money-losing stocks. People are buying. Gold companies are making a killing. They have huge earnings. The earnings are growing. So there's a lot of value here, but we also have momentum. So you have momentum and you have value. See, the tech stocks, they just have momentum, right? And that could collapse at any moment. But you've got a solid fundamental foundation behind what's happening in precious metals. So this is just going to continue. Next year could be even better than this year, even though this year is spectacular. But you got to buy, right? You can't just procrastinate anymore.
The Federal Reserve's preferred inflation gauge, the PCE, continues to signal rising price pressures. Monthly data came in hotter than the previous reading, with the year-over-year figure at 2.7%, while the core measure held firm at 2.9%, well above the Fed's 2% target. Yet, despite this, the Fed is cutting rates instead of tightening them. On the surface, commentators argue that rate cuts aren't needed, given that unemployment is low and stocks are at record highs. However, in reality, those market highs exist only because of the expectation of further interest rate cuts. Without them, both the economy and the markets would quickly unravel. The problem extends beyond monetary policy. Expansive government spending, record borrowing, and protectionist trade measures have weakened the country's foundation while inflating costs. The dollar, though holding steady against other fiat currencies, is consistently losing ground against gold, the accurate measure of value. That suggests far greater inflationary risks ahead, with 2026 likely to see a sharp acceleration. Meanwhile, new political gimmicks, such as expensive gold and platinum visas, will not solve the deeper issues of taxation and competitiveness. For many, Puerto Rico's favorable tax treatment may prove more attractive than costly shortcuts. Let's get back to the interview.
The PCE, personal consumption expenditure. Now, this is the Fed's favorite index, right? And I think it's their favorite because it's the lowest, right? But the PCE on the month was up 0.3, which was expected. But that's worse than the prior month, which was 0.2. So it got worse. Year over year, up 2.7%. The rear view mirror was up 2.6. Now, yes, everybody expected it to go up to 2.7, but it went up. It's not going down. Why is the Fed cutting? Its favorite inflation measure is moving further above its 2% target. So why are they cutting rates? Why are they saying they're going to have more rate cuts? And it's worse when you look at the core, because apparently the core is the one they think is the most important. And the core was up 0.2, which was a little bit less than 0.3 from the prior month. But year over year, the core is up 2.9, the exact same as the month before. 2.9, it's almost 3. You're 50% above your target. Why the hell are you cutting rates? I was listening to this discussion on television today, and people were acknowledging, they were saying, well, we don't really need these rate cuts, right? Because we have this strong economy, and we got low unemployment, and we got a record stock market. So we don't really need the rate cuts. Well, we only need them if you want to prevent the stock market from crashing, if you want to prevent the economy from imploding, because the only reason it's not is because these rate cuts are coming. So you may not think we need them. It's only because we're getting them that the stock market is at a record. You can't say, oh, look, we don't have to cut rates because the market's at a record high. If we weren't cutting rates, it wouldn't be. In fact, the Fed should be hiking rates. Not only should it not be cutting rates, it should be hiking rates. And then the market would crash, right? So with the economy, in fact, the economy is already weak. When they keep talking about the low unemployment number, that's all BS. Unemployment is high. The numbers aren't accurate. That's the problem. The policies, the real economic policies that Trump is promoting, which is massive money printing, huge government spending, massive increase in the size of U.S. government and the burden that it places on the U.S. economy. All of this is going to undermine our ability to manufacture. It's going to make us even more dependent on the imported goods that are now even more expensive because we're paying tariffs on top. But what's really going to exacerbate it is going to be the dollar. And to me, I don't know what's holding the dollar up. Obviously against gold, nothing, because the dollar keeps sinking just about every day in terms of gold. But that also means that the euro is sinking, the pound is sinking, the yen is sinking, right? People all around the world are seeing their currencies lose purchasing power, measured in gold and pretty much everything else. But the exchange rate of the dollar has just kind of been holding on to its initial Liberation Day losses, and it hasn't just fallen, over. I think that's going to happen. I think you could see a big drop in the dollar in the fourth quarter of 2020 of this year, 2025, and I think that's going to really accelerate the increase in domestic inflation that we're really going to see in a big way in 2026. Now, some people might say it's just the lagged effects of tariffs, and they may try to just dismiss it as being transitory, or a word that means transitory, but without saying transitory. But the markets are going to see through that, and inflation is just going to run out of control. The one other thing I did want to mention from this week is Trump rolled out the gold card and now the platinum card. I guess Trump didn't realize that gold is more expensive than platinum, because the platinum card is the more expensive card to buy. And it's now the platinum card that gets you out of your global taxes. And that one I think is $5 million. The gold card at $1 million doesn't get you out of any taxes. It just fast tracks you to U.S. citizenship. And I don't think a lot of people are going to bite to pay $1 million to come and pay our high taxes. I don't think there's going to be nearly as many takers. There may be a few takers of the platinum card, but only if they move to Puerto Rico, because all that exempts you from is your worldwide income and not your domestic income. Although, again, I don't even know that that's constitutional. I don't know that the U.S. government can exempt taxpayers. If you're here in the United States and Americans are taxed on your worldwide income, how are they going to say that, well, these Americans, they're here, they don't have to pay taxes on their worldwide income, but they would still have to pay tax on their U.S. income. And by the way, all of your capital gains are U.S. sourced. So even if you buy a platinum card and you come here and you trade stocks, you're paying, capital gains tax. But if you happen to live in Puerto Rico, you can get zero capital gains. So I have a feeling that I could have a lot more neighbors here in Puerto Rico that are not coming from the States, but that are coming from around the world, because if they want to live in the U.S. and they want to, they have a lot of capital gains, if they make Puerto Rico their home base and they spend, 183 days a year here in Puerto Rico, then not only will they get out of their worldwide tax, but they'll get out of all their capital gains tax. And if they have a business, if they run it from Puerto Rico, they'll pay 4% tax on that, as opposed to paying whatever high rate of tax that is if they operate out of the States. Because most of the other countries that have these golden visas have lower taxes than the U.S. That's why people are going there. They're going there to escape high taxes to get lower taxes. And so the U.S. doesn't really have that to offer when it comes to the domestic tax rates, which are pretty high.
The signals from both markets and policy decisions are becoming increasingly difficult to ignore. Precious metals continue to rise as Wall Street begins to shift its traditional portfolio models toward gold, and inflation pressures are proving more persistent than the headlines suggest. At the same time, government spending and monetary easing are setting the stage for more profound distortions in the future. These aren't isolated events. They're part of a broader shift in how value, wealth, and stability are being redefined. The old strategies that were reliable for decades are no longer effective in this environment. Positioning ahead of the crowd will matter more than ever, and those who adapt early will be in a far stronger place as this cycle unfolds. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.